Well, hello, folks. It's midweek update time. Let's get into it. It's the 23rd of July, another Wednesday. The markets seem to have a little bit of a blip, so let's find out what's going on. You guys get this deal. You guys are going to share some trades, and we're going to just make sure you take responsibility for what we share together, all right?
All trades and analysis in this video are for professional traders only. This video has been released to the public after a delay required by our compliance department. Maverick Traders received this market recap immediately, along with real-time trading support and resources. Maverick Trading is a proprietary trading firm that backs professional stock and options traders with firm capital. Our traders keep 70 to 80% of the profits they generate. If you're ready to become a professional trader, click the apply link in the video description below. Let's break down what happened in the markets today.
So the current outlook, like I say, there's a little bit of a blip up. We'll get there in 1 second, but this high base does continue. We've been talking a lot about this over the last few weeks. It is definitely we got all sorts of phrases, the plug your nose and buy it, stick to the bull side. We got this +1 outlook due to the fact that we're at these high base levels, but we do see a lot more positive movement than anything negative. I'm also seeing it into some of those weaker sectors. We'll get there in a second. So high base continues. Existing home sales, we got that came out. It was lower than expected, but the prices remained high. So it wasn't the fact that the prices are falling apart and the existing home sales are falling. It's just the prices are staying stagnant, just less activity when it comes to purchasing existing home sales. So is that good or bad? I don't know. The markets don't seem to take it either way. We do have earnings season. We've got good news, bad news. I've had AT&T came out, I think, earlier today, or was it yesterday? We've got T-Mobile out this afternoon, but then we've got Google, Tesla, IBM all coming out this afternoon. So we're still in the midst of that. We'll see where those go. But overall, we're still in a pretty bullish situation. So let's just jump out and take a look at where we're at right now. This can change. So while I was building this class, and I love these live updates, is because you get stuff like this. Gap up in the morning, markets seem kind of sideways, another choppy move, and then a little bit of a bump up. I perused the news headlines real quick. I saw some sort of a deal being made with Japan. We'll see if that's part of it. I imagine that could just be the initial reaction to it. All sorts of things like that can continue to pop up. What I have found, though, folks, these markets do not take much to put on more. What I mean is we're seeing a lot of stuff going into things that have been underperforming, sectors that have been underperforming. We've been beaten down quite a bit, or I've been beating down on the cyclical, consumer cyclical, and defensive sectors for a while, but there's some stocks individual in those that seem to be doing pretty good. One that we also will look at is take a look at the below the 50-day moving average. We've got advanced decliners so far right now is definitely glass half full here, about 65.30. And then we're like, look at this, about 70.22 so far on the above below. That can change, but it's definitely leaning towards the bull side. So all the bull trades that we've been talking about or putting on have been working. I know personally a lot of the stuff that I've been following along with and trading has been working out all right. Some of the sideways stuff has been breaking to the upside. One or two has actually worked out pretty good. But we just got to continue to do more of the same. And what I'm hoping to get out of today's class is that. So if you guys got trades you want to add to our lists, please do it. Let's jump over to the groups. And you can see that today pretty much everything is up. The 1 week performance, and this is going to bounce back and forth because of earnings, I believe. Is it interesting to see communication services down here like midpoint? All green, by the way. Notice this, all green last week, all green today. But look what popped up. Consumer cyclicals, basic materials, right? We got some consumer defensive still on the weaker end here, as well as it is today. But there are things being purchased off the bottom. Rob made mention of this yesterday on the end of day, that we are seeing money being pretty much thrown at a lot of different things. A lot of bear trades that I've had have a little bit of a bounce in the last little bit. Now, it's nothing to really write home about. If you have staggering expiration cycles, which you're supposed to have, last week for me was right on the money. Today's a little bit kind of off, but we still have a few more days. And going into the beginning of August, second week into August, I've been super mindful of earnings and actually kind of ramped things down. I'm not somebody that's too active when it comes to earnings season. Because of that, it's more of a coin flip. So let's just jump straight into the SPY chart. I didn't have it up, so we'll start with it, and it's just this slow bleed higher. It's actually a very fun place to be if you are just stubbornly and boring bull. If you've just kind of, oh, that looks good, I'll buy some of this, or here's a cool +1, I'll throw a dart at that. If you are following your rules and entering when they trigger and managing according to your systems, and you've been primarily glass half full, meaning you have a +2 portfolio exposure, +1, +2, you're probably doing pretty good. Don't worry too much about trying to catch those sideways and the bears as well. Don't forget about it. That is kind of not your focus. Your focus is to lean towards a +1, +2 portfolio, at least in the short term. You can see that, boy, I think we're threatening new highs again here on the SPY. Let's take a look at the Qs. Now, a lot of these can change, and they can change pretty actively. I think the Qs is going to have a pretty decent reaction this afternoon when it comes to Google, right? It's a big part of it. Tesla, as some of those stocks continue to come out through earnings. So good news, you'll see this gap up. Bad news, it'll go back down. So it's going to be a little bit more tumultuous, I believe, than the S&P until we get out of or closer to the ends of the earnings season. So just be mindful of that, but it is still high basing. It is still strong. It is still bullish. There's nothing bearish about it. Let's take a look at the diamonds. I like to just look at all three of our major markets, and this looks like it's got it's trying to play the catch-up game. Look at this little gap up, this nice ascending triangle pattern in it, or I should say high base breakouts. High base breakouts. Here's one right here. Here's the breakout. Here comes another high base. Boy, I drew that line a little high, folks. But let me get rid of it. But it could come back and start to push above previous highs. Let's see if I can take one line across everything. Yeah, it might stay a little high, but that's okay. So you could see how this is channeling, breaking, channeling. It looks like it wants to push higher. I think a lot of it will have to do with some of the tariff news. Things like, hey, we just made a possible deal with Japan, which has caused that move that we've seen so far intraday. We'll see where that goes by the end of the day. But so far, so good. So that's kind of where we are sitting. And so nothing's really changed. If you guys have positions that you're in that are comfortable with, you might as well kind of just follow along with your rules and let them marinate. However, if there are some positions you guys would like to share, let's do it. So let's get started here. First one is AVGO. This is from Jaws. Taking a look at technology, Broadcom Inc. Take a look at this. All right. It's kind of got a very similar pattern to the Qs. It's moving higher, a little bit of a corrective action or a pullback. I think it can consolidate. Today's the day where it looks like it had a little bit of a move to the downside yesterday. Is that just profit taking? That's all I got to say it is for now. It's a pattern that we've seen before with this. Seems like it has no problem correcting for a little bit before it takes off on its next runs here. And this one was a little bit more of a consolidation than a jump. So if you want to play something range bound on this, Joss, it just depends on your outlook. I definitely would be bullish. It looks like it's in more of a little bit of a corrective action. I'll take a look at the shadow that it's trying to establish now. Now today hasn't finished, but it is right on that rising 20-day moving average. So a couple things you can do with this. If you want to play to the bull side, sounds like you do, then yeah, give it a little bit of a move, or I should say some room. Let me zoom in a little bit more here. And play that range. You got to respect these. You got to give it their due. We've got a major support level right about there. You can see it kind of correlated in two spots. That's a pretty deep pullback. I like this candlestick right through here. The 20-day moving average could be a very potential area of where it might want to just tighten up this hammer candle if it continues higher. If you wanted to shorter term this, and I know that there's some shorter term traders out there, then just play the resistance previous. We know that in the last little bit, the last time it did a move like this, it got there pretty easy. So you could just kind of play something short, and it's not short. I mean, that's about $10 between where it's at and that target. If you want to wait for a little bit more confirmation, you could kind of let it establish another pivot point, confirmation of that hammer if it does finish tomorrow. And then I would probably trigger something a little bit more sloped. Maybe instead of that 290 resistance, maybe cut the midpoint here, 295, or even if you want to extend up to 300, that's fine. That's a little bit more aggressive. That's more of a +2, +3 trade. The first one, if you're going to hit that 290, be more of a +1. But I do like it. I think it's got bullish potential. So we will add that to our list. Let's jump over to another suggestion. Oh, Darth's got Meta. Okay, of course we got Meta. Let's talk about it. Now, Meta was a trade that I'm still in, and it was more of a +3 trade. I was trying to play the 745 target back. I love this move up here. I'm thinking I was going to kind of butterfly land this thing, and it's not doing it so far, and that's fine. I position size for these things, and it's going to expire on Friday. It does have its earnings coming up here. What's that? The 30th after market close. So all my position will be gone before that. But let's see what Garth's got to say about it. All right, so let me read this question here. So is this a potential earnings play? Has it done its pullback? What's kind of a thing that we can do with Meta? When it comes to the pullback, and this is what I was focusing on. This was a trade that we discussed, I believe, a few weeks ago. So I'll do it again. This was the pullback that I was hoping for, or I say following with. Now it decided to roll over. Now at this point, we're established a pivot low, lower pivot high, I should say, and we did break the floor, the first line I drew, and we decided to bounce off of a support level. Now this is a big support level. Now overall, technically, the first lower high and a retest to a support level, it's not quite changed trend, but it does look like it wants to. What I mean by that is I would need to see it break this level here and go a little bit lower, and then I could see, okay, it's definitely, the uptrend is done. Right now, it's being threatened because there's a couple other ways we can look at it, and I'll get there in a second. So the move up, yep, that looks like a bounce, but we had kind of this inside day, a previous day, and let me get a little bit more of an explanation on that. Get my arrow here. So we have a move to the upside, another confirmation of a pivot, but this pivot is a lower low. Then we have a bearish engulfing pattern, which would show hesitation or consolidation, and so far now we have an inside day. This is definitely performing like something that's about to get into a news event. So it's kind of a wish-wash. Is this too expensive, or is this too expensive? Or maybe I should buy it down here. You will find that more often than not, most stocks like this will kind of settle in an area up till its earnings, and it just depends on where the bulls and the bears go. So to answer the question, is it done with its pullback? I think it's done with the corrective move, sure. But moving into earnings, it's going to be more of a consolidation or basing point. Now, what does that leave us with? Well, we have to either play the earnings and I'm going to say it, but we got to guess up or down and then put something on for that. Or we wait for the earnings and play if it emerges as a continuation of a pattern or a change in a pattern. All right, so we've got ourselves a bull play here, and we got ourselves a earnings play, possibly. Let's go back to AVGO. Jaws was saying, hey, as long as this thing can stay above the 270 mark, he's going to keep this thing long. And what's really good about this, you can play ranges. I like that. What I like about playing ranges is you can have a +1 trade credit or a -1 trade credit, or both, and just play a range. But leaning towards, hey, glass half full, so 270 or up. Broken wing butterflies are good. Skewed butterflies are great. Bull credit spread is great. And to add to that, Josh says he did a put credit spread. Sideways to up. He's going to be solid. So I like it. Thanks for sharing. Okay, so let's move on to another trade, a couple that have been floating around. Urban Outfitters is one that has popped up a bit. And this is one that actually I like to use because these were the stocks that were not doing very well at all. And you could see that. You could see that these have been out of favor, the consumer cyclical stuff. But look at the recovery on some of these things. Comes out of earnings good. A little bit more optimism. And now, as of late, it's just pushing above some resistance levels. So we're also seeing the emergence of some stocks that were out of favor back into favor. It is back up to new highs. So before that, I should say, breaking the highs that it had at the beginning of the year and breaking them pretty comfortably. So yeah, things like this, you don't have to play them as continuation breakouts. You could play them plus ones or plus twos. Let's move over to another bull. This is Upstart. We've been sharing with these over the last couple of days. What I like about that is just kind of an ascending triangle pattern with a little pop up today. Not sure if we're going to get any sort of follow through, but it does look pretty optimistic. Now, these are all going into some sort of earnings, so just make sure you double check. If you got FinBiz, you can see it's usually down to here. If not, you can go to earningswhisper.com. Yahoo Finance has it. I'm sure other charting systems you guys are using has the ability to check earnings. So just be mindful of it. But I just like how this is kind of gapped up, moved higher, breaking out, moving, pushing as it goes. You've got a pretty decent resistance here at 90, which I like to see overhead resistance. It gives me a shorter term target. It makes me kind of feel comfortable knowing that, oh, you know what? I'm going to throw a dart here for the next week, week and a half. And, seeing where it was before, that's kind of where I want to have my landing point. It doesn't need to get there. I'll probably put a little bit more emphasis when it comes to expiration more so than price targets because I want to keep things a little shorter term, at least as we have this high consolidation going on. I don't want to be bearish and I don't want to not participate, but I do want to be a little bit reserved, a little bit tentative. I'm not going to have my whole portfolio bullish here because when this does correct or fall apart or turn, I'm not just talking about this stock, but the markets themselves. It's better to be able to compensate for it or to know that you're not fully exposed. So this next one is Wayfair, and it's consumer cyclical as well. I just like the same pattern as the previous one, right? But this one's above its resistance levels. So this is kind of setting new highs, same idea, a little bit of a gap up. Sure, you're going to be reluctant. I usually am when I see price action move out like this. It breaks up. I kind of scratch my head saying, well, it's probably going to retrace or consolidate, and it could just take off on me. So how do I take advantage of it? Well, that's easy. Just include that in your range. Include it in the diagonal spread or the targeted butterfly or just a wider spread, credit or debit. It doesn't matter. Once again, you have the ability to choose your time frames. If you are going to expect or allow for this to maybe consolidate or pull back for 3 or 4 days, then you're going to need to go more than a week, aren't you? However, if you think it's going to go sideways or consolidate for 3 or 4 days and you don't want to go past that week, you got to do something a little bit more maybe out of the money credit, something that can absorb the pullback without punishing the position that you have. So just be cagey, be mindful. You gotta think when you place these trades on what you're trying to achieve, not only with each trade, but your overall exposure in the markets currently. Let's take a look at IBM here. The comment is IBM. I know earnings are today, but what are your thoughts in general on the trade? And it's very, very similar to Meta as it gets closer to its earnings. Now, it is today, but it did exactly kind of what you'd expect to do. Let me zoom in a little bit more. There we go. It has its corrective action. It's got this pullback going on, and then it's got this choppiness. And what that is you've got, now that red candle is a gap up that moved higher and closed lower. This next red candle is a gap, well, I should say, no, it actually opened, traded down, and then look at this gap up, and it's trading higher. So it's a push-pull. Is this too expensive or is that too cheap? Is this too expensive or is that too cheap? And it's just posturing when it comes to the comfort of anybody who's in this position into its earnings. Still an unknown. It's going to absolutely have its gap up, gap down. It has, and I'll say it really has nothing to do with the numbers. I mean, it should when it comes to the fundamentals in the longer term. However, it's the reaction of the current sentiment that matters most. Hey, it's got good news, but it gapped down. It's got bad news, but it gaps up. None of that matters. We're susceptible to price action. So just be mindful of that. Usually when it takes one direction, we want to be in it. If we're not, we should get out of it. If you're playing earnings, once again, we have a whole section on that, don't we? So just review it. When you're playing earnings, you usually choose one side and just kind of live or die by it. Now, to the follow-up on that, Todd, is it looks bullish to me. This looks like kind of a choppy consolidation area to where if there were no earnings, I would wait for emergence. I'd wait for a little bit of a move to the upside, consistent, get rid of some of this chop, and get something back on track. First target somewhere around that 292, 295 level, right? Somewhere up in there for the shorter term. And then see if it hits resistance and if it can't set something else up again. So shorter term playing it without that earnings, I would have to see a little bit more motor behind this to the upside. I'd need to see the markets a little higher, things like that. And then my first target would definitely be that 292, 295. Now with earnings in or coming out today or tonight, I should say, everything's just kind of right out. But keep an eye on it, what it does after earnings. If it can establish a pattern like I just drew or something similar, maybe it gaps down here and it's gone. You can still set up a trade later. A lot of times I like to look at things that did good or bad and trade them a few weeks or a week or so after their announcements. Let's take a look at Rio. It looks like it's kind of reacting to things. What's really difficult about basic materials that I've seen as of late, and this is specific to mining. I've seen this a lot when it comes to energy, oil and gas specifically, but there's just lots of gapping. Now Rio, it's United Kingdom, so it's sponsored, trades primarily on the FTSE, right? So every day you're going to see a gap in every candle it has. Wherever it closes in England, it is where it opens here and vice versa. However, I'd like kind of the pattern that it's going. I think it's pretty good. A little bit of a surge to the upside. Yeah, it does seem like it is definitely going to threaten those levels. It feels, and I hate that, that's our four-letter word, folks. It feels like it's overextended. But what's really cool about this is this is going to be tied to not only the material itself. I mean, it is a industrial mineral and a mining company, but what they mine has a lot to do with the costs and their overheads and the price of what they mine, I should say. So after a little bit of extension, some reactions back and forth, let's see if it can consolidate. So I guess what I would say, yeah, I mean, if the basic materials can kind of move higher and show that, hey, it's going to get a little bit stronger, I would be really focused on more of a consolidation play and be patient with this. This is something that I have no problem being late on because what you might get is a couple more gaps down and then a couple more gaps up before that happens. So wait for more of a substantial gap if it can correlate with some strength in the mining sector or materials itself, and see if it can't stay above maybe that 65 level for a little while. And then past that, I would be a little bit more comfortable playing it. But let's add it to our bull list just so we have something else to look at. So let's get into any sort of sideways trades. Now, folks, the sideways trades that we've been looking at have been decent. Some broke out. We had sideways doesn't stay sideways forever. So take a look at the ones that we had on our list and see what they've done. This is one that we've been toying with. This is a trade that I decided to take that expired last week. It was at 94, 92, 98, 100 Iron Condor. And I just liked how this was range bounding. I'm moving forward here because I want to see when Walmart has earnings next. And I can't see anything past the 15th of May. I imagine it's going to be soon. But it seems to kind of still be meandering around. I wouldn't be opposed to maybe throwing on another one of those trades. I don't know if I would go as I guess you have to stay wide on that one. But it just depends on how this reacts when it comes to some earnings. Now, I know that consumer defensive has seen some stocks actually gain a little bit of strength, but we could look at things in sympathy in its sector, stocks that do the same thing, and see what they do. Because what will happen is you might have something like a Target, and we'll just use this for fun, that might come out and have earnings soon, and it doesn't look like they got anything listed as of yet. But if this has good news and it shoots up and it continues higher, it might pull Walmart with it. It's kind of referred to as kind of a sympathy play. It happens quite a bit over earnings season. However, I just figured I could bring Walmart back up to show that, hey, it's kind of hanging in there. It looks like it might be getting a little bit weak. Not gonna lie, folks. It did threaten the 94 a couple of times when I was in this position, but nonetheless, it stayed there. So if I was to put on another one, I would probably give it more wiggle room to the downside. I'd probably place something a little bit below this support, maybe a 92.5 or 92. And then maybe something a little shorter on this area. No, I wouldn't. I'd have to stay back up to the 98 100. So a little tricky because it's in between some strikes there, but if it rolls over, continues sideways, maybe another opportunity could be had. Just something to think about. All right, here comes another sideways from you guys. Let's take a look at FTNT. Very nice. Yeah, another sideways trade here. Thanks. I like it. Range bound. Here we got our earnings coming up on the 6th of August. So you got a week or so on that. Let's see, just real quick, just for fun. Let's see what kind of options we have on this. Weeklies. All right. So we got an opportunity. We got a few days for this week, or if you guys want to jump out to August week 1, not a bad idea. But yeah, I like it. Just establish a range. My first glance would be somewhere above the 108 level and somewhere below that 98 level. But I like where it's at right now. It'd be nice to see it kind of play with this. That's a 50-day moving average today and kind of stay on it. If you want to go a little tighter, 102, 106, I think that'd be a little too tight. I'll take a look at this one with you guys as well because this might be one to throw on for week 1 of August. Let's jump over to some bears. This is a bear that I'm still in. It looks good. It's rolling over again. I'm already past my max target point. This is good. I like how it continues to slide, float lower. Another opportunity to actually put a credit spread on there, something sideways to down. And then another one I'd like to bring up is Costco. This is one that didn't trigger for me the first time I looked at it. I missed it the second time. So missed it here, and here we go again. So we'll see where this goes. Costco, I don't see any earnings coming up for it, but they will be soon. But it's just got this slow bleed lower. If you guys are into that, kind of that sideways to down, I've just got done touting about how bullish everything is out there. I'd rather be +1, +2 in my portfolio exposure. But if you're looking for a bear or so, these tend to just kind of drift lower. If you want to wait for a bounce, I've got caught in a few bounces in some of my bears as well, folks. They are bouncing, but these are a couple that just aren't. Be mindful of it. Just keep an eye on it. See if it can establish a tradable pattern. Maybe we can jump into it a little later. Let's take a look at UNH to the downside. I've seen this thrown around a bit. It's more of a consolidation or sideways, and it's easy to say that because it's just been the last couple of days. It is definitely going into its earnings here in the next couple of days here at the end of the week, or the 29th, I guess that's the beginning of next. Yeah, somewhere next week. But overall, it's just it looks like it's kind of bled off, and it's trying to keep that just having an oversold bounce for right now. Now, Garth says, I've already had 2 successful bears in the last few months. Am I getting tunnel vision here? You might be. And the best is to find bears in the markets that we've had here. You really have to be pretty selective. I found that they've stayed that way for a while. Now, that being said, folks, there's a couple of bears that I've had on my list for a while, like Campbell's Soup and things like that have bounced substantially. So they're only good until they're not good anymore. It doesn't mean that you can't trade them and try them, but that last move you're not going to do very well on. So if you're okay with that. Do you have tunnel vision to the bear side? Well, no. Maybe you're just you're just on a little bit of a hot streak with it. But be patient. Allow these things to have their bounces. Let them ride, roll up, because when they do take that breath, then they can go back underwater to continue to drive lower. So just be patient with it. It's always good to have a couple of bears laying around. But once you find that, hey, I've got 3 or 4 bears and I only have 3 or 4 bulls, you might want to kind of rethink things, unless you want exposure of 0 for your whole portfolio. All right, so let's just jump back real quick and see where the markets are at. Yeah, it looks like whatever news popped up, we'll have to double check that, folks. The rest of the day, anything can happen here, but I think it was a deal maybe being cut with Japan. Hey, we'll see if that plays itself out or not, but we have plenty to go off of. You guys can see down here that we do have some earnings coming up. Here they are. They're down there. Tesla, Google, IBM, T-Mobile. If you click on these little areas, it'll give you a list of what else is out there. Kind of fun with FinViz. If not, you guys know where else to check it. So, all right, let's just cut it there and see where we're at. Let's go ahead and share these trades with you. So this is what we got. Hope you guys are continuing the list. I got some trades that I carry over from this class, and so far so good. It's been a pretty good one. to this point. But I will have to say that it's mostly going to be my +2, +1 trades is what's done the most. I've had a couple of bears really come in and even a couple of sideways. So trading is good out there. You just have to kind of throw those darts. My darts have been very few and small, meaning my position size aren't very large. They're about halfway. And I'm not comfortable with anything over about a week and a half. And so far, it's been neat just to roll from week to week to week. So let's keep doing that and see where we go next time we get together. All right, guys, thanks for your participation. As always, I truly appreciate it. And I'm looking forward to talking to you guys next time. See you, folks.